Good morning, everybody. Thank you so much for joining us today for our webinar, Innovations in Remittances and International Transfers During the Digital Age as it Lands in Latin America. My name is Ana Maria Yumiseva. I'm the Director of Frecuencia Latin America. Many of you know our company. We are a market intelligence company. We specialize in analyzing developments in the mobile industry in Latin America, specifically in mobile financial services. So we are very, very honored and fortunate this morning to have two very talented and knowledgeable speakers that are willing to share their knowledge on the latest innovations in mobile remittances and transfers. As you know, digital is influencing dramatically and changing the way we do and perform our financial transactions in Latin America. So we're going to learn today a lot about the academics and the business models behind it, and then also what we can expect in the future from two different point of views. So I'm going to briefly introduce our first speaker. You should have the complete bio of our speaker, so I'm not going to go in much depth or depth in the descriptions of our first speaker and our second speaker, but I want to introduce firstly Xavier Martin. Xavier is the Experience Director at the Digital Frontiers Institute, which is the Digital Frontiers Institute is I'm going to say it in Spanish, un instituto de capacitación, and he's one of the lead, let's say professors or directors at the Digital Frontiers Institute. Javier, I'm so sorry, I'm making a mess of this introduction, but I think I'm just going to let you have the microphone now. And maybe
I think it's perfect, Ana Maria, and I think that if you want, we can just jump in and start quickly. So we give some time for questions and answers at the end.
Yes.
No? And then as you remind me, yeah, we will do that in English and not in Spanish. No, I have a strong Spanish pronunciation, but just forgive me, all the audience, for that. I will try my best. So as you were saying, thank you very much, first of all, for inviting me to participate today. The presentation that I'm giving is drawn from work we have done at DFI in developing a 4-week course called Remittances in the Digital Age. That is now ongoing and its first edition. So this is a bit of a sneak peek, so to speak, of some of the issues we address in the course. Today, I'm going to start with a look back at the development of money transfers and 4 important innovations that brought us more or less where we are today. Next, I will talk about the main players in the remittance space, banks, specialized omni-channel providers, and digital-only providers. I will talk about the shift to digital and where and how that is developing. And finally, I will quickly look, if we have time, at mobile money and remittances. That is the role of Bitcoin and other cryptocurrencies in remittances. Okay, so let's get started by taking a quick look back at the history of cross-border payments, and in particular at 4 key innovations that have somehow shaped where we are today, 2 related to business and 2 to technology. And I will say that what interests me most here is that given how much had changed about the way we live over the last few centuries, it's somehow surprising to see that the way we move money from one country to another has evolved relatively little. Of course, our interest in moving money from one point to another is not new. We can find reference to ships that move huge amounts of money across long distance into order to pay soldiers of the Roman Empire, no? From more than 20 centuries ago. No? A key business innovation came in the 13th century when it became possible to send money abroad by moving information instead of physically moving cash. We can find some early examples of paper-based long-distance payment instruments in various countries, but the practice of moving money using a paper instrument wasn't generalized until the 13th century, and that explains a little bit the expansion of international trade that allow this generalization of the use of paper-based instruments. Here we are talking about the bill of exchange mainly, which really facilitated foreign trade and was really the key instrument for cross-border payments through the end of the 19th century. The next crucial innovation didn't occur until the mid-19th century, and this time it was about technology, specifically the leap to instant communication. The telegraph and later the telex eliminate the need to mail or carry information. Instead, you can just instantly transmit information across cables and wires. This vastly shortened the time needed to process cross-border payment, and for the first time in history, advance in communications weren't linked to advance in transportation. So by the end of the 19th century, telegraphic transfers start to replace the bill of exchange as a means of sending money abroad. Although it was not until the 1940s and the introduction of the first teleprinter exchange, the telex, that banks began to use wire transfers more actively. But really both bill of exchanges and banks wires are designed to send large value transfers, mainly related to international trade. In order for migrant workers to make use of these services, intermediaries are needed to facilitate access to make them more user-friendly. During most of the 20th century, it was a small business that offered sideline informal services of hawala-type money transfers that brought proximity to remittances senders. It was not until the mid-1980s that development in communications support the emergence of specialized international remittance sending companies. In the 90s, that is when we saw companies like MoneyGram and Western Union developing a new business model for sending international remittance-based remittances on a system of international agent network in the sending and in the receiving side. The first fully specialized companies in money transfer emerged from the creation of these agent networks, which, among other things, bring money transfer services closer to customers. And here I'm sure that Paul later can give us some more insights. In order for this type of new business models to evolve, one last innovation had to take place, a technological leap forward to facilitate that was facilitated by network computers. The reduction in the price of international communications and the emergence of the internet. These advances allow the simplification and standardization of the processes necessary for the emergence and expansion of the specialized money transfer companies, which was also made possible in part by the creation of SWIFT during the early 70s. So that's just looking a little bit back, to start to look a little bit at the different main players that operate in the money transfers industry. And I want to start looking a little bit about the role that banks play. In one sense, banks play an absolutely key role, and at the same time, they seem almost entirely absent from the remittance business. To explain what I mean by this, let me break down banks' role into three stages. The first mile is the stage in which the remittance sender selects a product and delivers the money to be sent to the recipient. The middle mile is the stage in which the international transaction takes place, and the last mile is the stage in which the recipient claims their payment. Banks have built the essential infrastructure for the middle mile, the payment rails of remittances, which relies on correspondent banking relationships and SWIFT-based transactions. And it's also the case that bank branches in receiving countries play a significant role as a payout agent. However, banks play a very minimal role in the first mile, in which a client selects a service and sends a payment. Remittances contribute a very small percentage of banks' overall revenue. For example, Wells Fargo, a bank that is an actor in the remittance space, had in 2016 revenues of more than $88 billion, but just 0.1% of this amount came from remittances services. In fact, remittances as a market isn't really even on the radar of many banks. They really turn up in annual reports. From the perspective of remittance senders, banks offer relatively limited services. Most only offer SWIFT-based wire transfers, account-to-account services without the option for recipients of picking up cash. It's slow. Typically, it takes 2 to 4 days for processing and target mainly at corporate clients, making large dollar transfers. There have been initiatives on the part of banks to engage remittance clients, but in general, many of these initiatives have been very short-lived. So why is the remittance market so difficult for banks? Well, I can point at least to four factors. First, it's true that volumes are high, but related to revenue, is considerably less. So it's important to factor in the difference between the volume of money that is transferred on an annual basis and the revenue that these transfers generate. Second, it's a very fragmented market. There are thousands of corridors, and there are not many banks that have like a global presence. Third, there is AML and CFT regulations that are really tough. We have seen billions of dollars in fines for banks recently. And finally, migrant workers generally fall into a client subsegment that banks are not used to working with. So I think that that's some of the characteristics of the roles that banks play in the remittance space. Another important actors, well, the main actors are the established specialized omnichannel providers, like MoneyGram, Western Union, and the players that specialize in this niche special financial service that is sending remittances abroad. The key players that control the distribution of remittance products for migrant workers are these companies, these money transfer companies. The banks provide the pipelines for cross-border settlement, but these companies are the ones that create the infrastructure that connects the sending and receiving clients. And they develop remittance products, promote them, set prices, and build a technological infrastructure to track transactions and grow and maintain distribution channels. The Asian network model allows money transfer companies to reach economies of scale without losing the benefits of the small Asians found in informal transfers, nor do they have to directly intervene in or manage the Asian client relationship. But building and maintaining a strong network is one of the most challenging, expensive, and important aspects of the remittance business. This includes structuring and paying Asian commissions, which together with risk management and compliance, customer acquisition, and the money transfer platform are the main building blocks of this type of business. Although there may be the perception that industrial leaders have been around for ages, in fact, the companies that now lead the market in international money transfer services entered the market in the last 30 years. Western Union initiated its international money transfer service in the mid-1980s. Shortly after, in 1988, was when American Express launched MoneyGram, which distributed its transfer service the following year. And UAE Exchange and Ria Money Transfer joined the industry a few years after this. So Asians have been the first point of contact for remittance customers for many years, But the development and widespread use of the internet opened the possibility for a digital channel specialized only for remittances, with no need for costly cash in Asian networks or physical Asian locations. By 2000, it was already possible to originate transactions through Western Union website. And just a few years after that, other remittance companies were also offering online origination, some under their own brands and some by creating a specific digital brand. By 2000, it was possible to originate transactions through that web, But it's really other new players that have pushed for a real shift to online money transfers. Zoom and Remit to India are pioneers in online-only remittance services, and other actors have been entering the space since then. What we have seen is that for most of these companies, it has been difficult to achieve volume, and they have seen growth at the expense of sustaining operational losses. So now we are now seeing a new wave of initiative with a more mobile-centric approach, thanks to the widespread use of smartphones and the development of user-friendly apps, which is having a real impact. So it was hard for many of the typical migrant worker customer 15 or 10 years ago, when the access was through PCs, computers, and laptops. Many of them, they didn't have them at home, they didn't have them at work. So the option was there, but it was not easy to access. This barrier is less and less there, because most of the people today in the sending countries have a smartphone. No, in fact, companies like Western Union, that just a few years ago originated almost all of their digital transactions through computers, today originate 3 out of 4 online transactions through mobile devices. We have seen a proliferation of these mobile-centric companies. Yet again, the reality is that most of these companies and apps only provide domestic money transfer services, where barriers to entry are much lower. The moment of transactions cross a border, we see a range of barriers come into play. The acquisition of expensive license, investments in compliance, and the development and maintenance of international partnerships for payments. So in addition to the veteran Zoom, which was acquired by PayPal in 2015, we can look at 4 well-funded companies that handle digital international money transfers, all founded in the last 8 years. TransferWise, that focus on capturing clients that previously used bank wire transfer services. WorldRemit, which has specialized in transfers to mobile money accounts. Remitly, tightly focused on the corridors of US to Mexico, the Philippines, and India. And Asimo, looking to integrate the social network experience with money transfers. In the spirit of their user-friendly apps, the bottom line is that the business models of these companies are not particularly different from other money transfer companies. So it's key to reach a minimum scale in order to absorb unavoidable fixed costs that the business have. It's also important to note that no matter how cool your app is, there is not very much space for differentiation. In money transfers, is moving money from one point to another. So it's true that in the recent years, they have appeared some new features. Most of the features of these apps are along the line of transfer trackers, transaction history, and access to beneficiary details. But there are some newer innovations. For example, companies with an Asian network on the sending side might offer app-based transfer in cash. This saves customers time at the counter since they set up the transaction through the app, and they pay at the Asian by providing a telephone number as an identification. Some companies now allow remittance recipients to actually request a money transfer, a bill payment or airtime top-up from the sender. Other companies are integrating their apps with social chat messengers, either through partnerships with existing services like Viber or WeChat, or by launching their own apps. And other providers are using chatbots to provide instant customer service without having to leave the Facebook chat. For example, TransferWise, Western Union have recently launched this type of chatbots. So one thing that I think it's important to notice is that the shift to digital has been quite slow. What we have seen is that so far the digital channel continues to be small in comparison with cash transactions. On the sending side, financial access doesn't seem to be a major barrier. In the UK, for example, 90% of migrants have a bank account, and more than 95% have a mobile phone and access to internet. Still, less than 5% of remittances from the UK to Africa are transacted online. So even though on average online services tend to be less expensive than cash-to-cash services, many remittance customers seem to be sticking with their cash and agent-based transactions. And in the case of companies like Western Union, for instance, although more than 80% of their customers have a bank account, consumer revenue from digital transactions amount to about 10% of revenues. And again, maybe Paul might be able to fill in from the MoneyGram perspective too here. So we can also see that the shift away from cash remittances to digital is very slow. Digital transactions are growing. It's at the pace of maybe 1-2% per year, and increases. So it grow 20%, but as a percentage of the total percentage, maybe the increase is 1-2 points per year over all remittances transactions. This doesn't seem to be a problem only for veteran players. That enter the digital channel as a new line of business. They experience the same similar problem. Other newer online providers have shown faster growth in recent years, but are still small players when compared with the transactions volumes managed by traditional money transfer companies, no? Or even these traditional players' digital arms, no? We see that Western Union, for example, is just with this digital money, the revenue from digital money originated transactions, no, is bigger, larger than digital only providers like Zoom that have a market share, no, quite similar to the one that MoneyGram has, no. So that's just a quick overview, no, about the players, no, and then I want to just focus, no, on two innovations. I want to talk a little bit about mobile money and a little bit about Bitcoin, no, and the role that they can play in remittances. So now let's take a minute to look at the role of mobile wallets in sending and receiving remittance transfers. No? Right now, mobile money is available in 90 countries, no, via 276 deployments. Globally, there are around 690 million people that have accounts, a mobile money account, no? Although just about 240 million of these are considered active. Sub-Saharan Africa accounts for about half of all active users of mobile money services, and it's followed by South Asia, which is in the last year has seen accelerated growth in this area. Most of the mobile remittance services that have been rolled out so far are focused on the receiving end. Out of the 51 countries in which mobile money-enabled international remittance service are available, only a third allow the service to be used for both sending and receiving remittances. And at present, just 1.1% of transactions that enter mobile money wallets are related to international remittances. So since 2007, and the first pilot of receiving remittance payments to a mobile money wallet, many initiatives have been developed, but most have struggled to generate a high volume of transactions. As we have seen in the mobile money ecosystem, no, international remittance transactions carry a very small weight, both in terms of sending and receiving. It's also somehow difficult to find accurate data about the number and volume of remittances received in mobile wallets. But in 2015, the GSMA, no, the Association of Telecom Companies that has a unit that work on mobile money, no, they estimate that 164,000 international remittances were received globally in mobile wallets, no, in December 2014. Considering that Western Union alone makes about 23 million international remittance transactions per month, no, that figure seems very, very low. Nevertheless, it's true that the last 2 years, it appears that in some corridors, the volume of transactions has increased markedly. This is particularly true for Africa, not coincidentally, because that is where we find most mobile money initiatives. No? In East Asia, where mobile money has found most traction, we also see that there is more focus on the reception of remittances into mobile money wallets. No? Mobile phone operators have been very active, no, in West Africa, as well in the development of remittance products, particularly from Ivory Coast to Senegal and Mali. No? And Orange Money has led these initiatives through its presence in these countries. Move Money has also introduced remittance products between Ivory Coast, Benin, Togo, and Niger. But the fact is that these companies have a presence in multiple countries, and all of the countries share the same currency, which facilitated the emergence of these initiatives. In South Africa, Africa's largest remittance sending country, Mama Money has been very active in developing alliances with mobile money providers in 9 countries. No? And beyond Africa, there are also mobile money business active in the reception of international remittances. No? In El Salvador, Tigo Money, no, received $65 million in international remittances in 2017, no? coming mostly from the US, no, and representing about 1.4% of the total remittance market in El Salvador. And here, probably Paul can explain us a little bit more about this experience, because MoneyGram has been also very, very involved in this partnership with Tigo Money. So in Asia, Mama Money has also developed partnerships with Paytm in India and Bcash in Bangladesh. In Philippines, GCash has also been promoting the option of receiving remittance payments to mobile money wallets for several years, partnering with dozens of remittance service providers on the sending side. So why are mobile money remittances struggling to take off? Well, there are some prerequisites that need to exist to be in place before international remittances can be sent from or received to a mobile wallet. First, at the most basic level, there must be a mobile money provider present in that country from which you want to send or receive the consignment. As we have seen, there are currently mobile money deployments in 90 countries, principally in countries that receive remittances. On the other hand, the mobile money ecosystem is typically weak or even non-existent in sending countries. There will also have to be regulation in place that allows mobile money providers to operate on the sending and receiving ends of the transactions. No? And in addition, of course, mobile money operators must actually be interested in offering remittance products and services. That means having necessarily incentives in place. No? So mobile money providers have moved away from exploring international channels because of the difficulties involved in reaching significant volumes. Second, the channel should add value for both the final consumer and for the remittance companies that partner with mobile money providers. From the point of view of remittance companies, there should be a mature mobile money ecosystem in place that includes a significant remittance receiving population already using mobile wallets. Interoperability between mobile wallets is also an important element for the development of the market. And from the point of view of the consumer, it should offer some clear advantage over existing systems, no? Either in the form of lower prices or greater convenience. In terms of price, it might be difficult for mobile money to create significant reductions since the intervention of a remittance company or an intermediary between the sending and receiving countries responsible for capturing the consumer will still be necessary. No? It is possible, however, that even if mobile money remittances don't come with significant lower prices, that they are nevertheless appropriate for those countries where mobile money operator agent networks are significantly larger than remittance service providers network, offering a more convenient service for customers. Okay, and just to close my presentation and wrap up, let me just talk very briefly about this new thing called remittances. Or for some time now, there has been speculation about the potential impact of Bitcoin and blockchain technology on the remittance industry. But let's look at Bitcoin and blockchain to see if really are disrupting the remittance market and its potential. So to answer that question, let's take a look at two potential use cases for Bitcoin in remittances. As we have said, remittances rely on correspondent banking networks to move money from one place to another. So in this scenario, what can Bitcoin bring to the table? Well, Bitcoin could be used to send money through the internet without the necessity of a trust third party. So that means that without the need of banks and without the need of money transfer companies. This is somehow it's quite revolutionary. It's never been possible before to send money without an intermediary or centralized control of transfers. Another use case for Bitcoin and blockchain is a settlement mechanism for money transfer companies, eliminating banks and correspondent banking networks from the equation. This is the approach that has been adopted by several companies who use cryptocurrencies as an instant settlement mechanism. Yeah, I will say that in order for Bitcoin to improve the remittance process, it can be more expensive than existing money transfer methods. It should be fast and it should offer a client-friendly experience. So what are the costs involved in sending Bitcoins? First, you have the exchange cost of buying and selling Bitcoins, that in theory clients can find Bitcoin sellers and buyers on their own, but in practice, many users require the service of a Bitcoin exchange, which handles these transactions for a fee, and also will add a spread to the exchange rate. To this, you should also add the normal bank transfer fees that will apply if you exchange Bitcoin for local currency. If you exchange Bitcoin for local currency and deposit it into an account. And finally, there is the Bitcoin transfer fee itself. That originally this transaction fee was quite low, but just a few cents. But in recent months, these fees have risen quite a lot. So in terms of price, yes, Bitcoin remittances can theoretically be cheaper, but not necessarily it's always the case. There are cheaper options from traditional systems already in place in many of the corridors. So yeah, it could be cheap, but it will likely not be the most economical option for most corridors. At the root of the cost involved in sending remittances, we find also KYC, AML, and customer acquisition and agent commissions, rather than cost derived from the actually transferring the funds, and so the potential of Bitcoin as a major cost saver, has also its limitations. In terms of speed, it's Bitcoin faster. The fact is that today instantaneous remittances transfers are more and more available in many corridors, especially from cash to cash remittance products. They're instantly. So can Bitcoin beat these times? Well, a Bitcoin transaction can be confirmed in as little as 10 minutes. But to this we should add the time that it takes to move money on the sender side from a bank account to the Bitcoin wallet, and on the recipient side, from the Bitcoin wallet to a bank account. Once we add that into the mix, we're probably talking about at least 2 or 3 days for the entire transaction. Also, is Bitcoin more customer friendly? Well, Bitcoin really is a complicated concept. There is a lot to learn. Wallets, private keys, exchanges, transaction confirmations and fees, volatility. At present, the Bitcoin experience might be a bit too complex to be considered user-friendly. While it's possible that more intuitive interfaces for transferring Bitcoins may be launched, they still have to compete with existing remittance apps, which already deliver a very good user experience. All in all, remittance senders are looking for transfer services that offer value, speed, and convenience. And so far, Bitcoin and blockchain haven't made headway on these 3 big areas. Nevertheless, I, like many people, I'm fascinated by cryptocurrencies, so I will be carefully watching this space to see what develops. There is so much going on in remittances today, and there is a lot of attention being paid to the importance of these transfers and what migrant workers do in supporting their families and really contributing to the economic development of their home countries. So this has been a quick overview of a few issues, but I'm going to wrap up here. And thank you very much for your time. And I'm really interested to hear your views, Ana Maria and Paul, and of course to hear from everyone else here in the webinar as well. Thank you.
Thank you so much, Javier. Very, very informative. I see an array of questions here. While we load Paul's presentation, when he gets ready, I just want to say that we will take questions during the Q&A period, which is going to be the last 15 to 10 minutes of the event. So for those of you who are asking for to pose a question right now, I'm just going to ask you to please wait until the last 10 minutes of the event. So that being said, I want to introduce Paul Bances. Paul is the head of business development for Latin America and the Caribbean for MoneyGram International. Javier mentioned MoneyGram a few times, so now we're going to hear from a service provider and his perspective about the industry and how a major player is looking at innovation in the field. So welcome, Paul.
Great. Thank you very much, Ana Maria. Thank you, Javier. Buenos dias, buenas tardes, depending on where you are. Again, my name is Paul Bances. I work for MoneyGram International here out of the Miami office, and I'm responsible for the entire Latin America business for MoneyGram. And the benefit, I guess, of going second on this webinar is Javier did a fantastic job with that really comprehensive explanation. So it makes my job a lot easier, and I'll be able to skip a few of the items I was going to focus on. I really don't have much slides. They're more talking points because I figured that following Javier, I'd focus on, given all of what Javier just spoke about, is to try to give a little bit of insight on how you formulate and execute a strategy to capitalize right now on what's occurring in the industry, and more specifically in Latin America. If you look at family remittances to Latin America, it's roughly about $80 billion is the size of the market, and each year it continues to grow. Last year, it grew about 8% and is expected to grow, once again this year. And while cash is still the obvious predominant form of doing the payments, there is certainly a rise in what we're called digital remittances or alternative channels. And this is, as Xavier said, is a result of a couple of things. It's the traditional players, let's say MoneyGram, expanding its products and services to include these channels, as well as the more recent or newer entrants that establish either a digital first or a digital only model. If you add into there the ever increasing penetration of mobile phones and smartphone phones in the region, then this is the obvious and inevitable result. I did come across a couple of studies that estimate what the remittances from a digital component are worldwide, and I think it was fairly high. But I think they included, Africa and India and other countries in Asia where, as Xavier said, mobile money and digital wallets are a bit more ubiquitous and are used more often. And I think it also depends on how you define digital. In Latin America, though, I believe that it's a much smaller percentage, but it is because we're in the very early stages of that development, and we'll go into some detail in a couple of minutes. But what that does is for a company like MoneyGram and other players, it creates vast opportunities if you're able to, again, capitalize on that. So I am going to refrain from going, I don't want to make this a marketing pitch for MoneyGram, but I did want to supply some numbers because we talked about it earlier during Javier's presentation. When you look at the importance of digital in a traditional player is if you look, for example, at the first quarter of this year, and this is public information that we put out with our SEC filings, but digital revenue continues to increase at over 20% in the first 3 months just of this year, and it represents now over 16% of the revenue for MoneyGram from its money transfer business. And as Xavier had stated in his chart last year, 10% growth on the digital revenue side and representing 14 to 15% of our overall revenue. So because of that, it's no wonder that all companies now are developing digital strategies or digital transformation, or even hiring new individuals to be the head of digital revenue and digital strategy. But in a few years, that word digital, I think, is just going to go away. It's the same way that if you looked at retail or commerce in the past, you had the heads of e-commerce or e-commerce strategy, and all that's gone away now, and it's just commerce because it's part of the core business that you are offering. So in a company like MoneyGram and some of the other players, how do you develop a strategy to take advantage of what is occurring now in this space, and again, specifically in Latin America? I think the first thing you have to do is focus first on the send market versus the receive market and the growth of digital in each. So for LAC, as I said before, we're talking about an $80 billion industry. Now, the reality is the vast majority of those remittances originate from, as we all know, the United States and Canada, Western Europe, or even within the Latin America region. But if you look at, for example, again, US and Europe, the first idea is to focus on those send markets. Obviously, the adoption rate is much quicker and much higher for those markets. They're more accustomed to processing transactions online or on mobile. And then that is where you have to focus your initial strategy, is on the outbound business in those markets. And there, the important thing is that there's different models. There is the complete or total, quote unquote, digital experience where you conduct a transaction either on your mobile phone or online, and you pay for the transaction online as well. And that is the complete digital experience, let's say, for the sending customer. There's also the hybrid experience, which is where you process part of the transaction online to reduce the amount of time that it takes, for example, at an agent's office or a physical location. You stage the transaction, but then you have a variety of ways to pay for that. You can certainly pay for that online, or you can pay via the cash network. And then there are other variations of the model where you have different payment options besides the bank or credit cards or cash, where they integrate with certain payment wallets, and you're seeing more and more of that, where some of these options become payment options on the online or mobile presence of the money transfer company. Now, much like other aspects of the financial services industry, the transition either in whole or in part to digital channels gains momentum. And you have to make certain that what you're offering is a good customer experience throughout the entire customer journey. And that is important because when you transition then now to the receive market, and I'm sure there may be folks out there that disagree, or there are certain concrete examples to the contrary. But I do believe, obviously, that these alternative channels in LAC still have a way to go before we see any real significant impact. Again, unlike companies like M-Pesa in Africa or Alipay or Paytm in India, we really don't have a player like that in LAC. And that's for obvious reasons. Each country is separate. There's not a region-wide tool. And although I'm sure that there's some players that have the capacity to build out a multi-country solution, we just haven't seen something that really rises to that level just yet. And of course, that cash still remains king throughout Latin America because of the typical use of the funds that are received with remittances. Now, with that being said, there are certainly very interesting developments that create these opportunities for LAC. Many of the banks themselves, I know we said that the banks are not heavy involved in remittances in the US, but in Latin America, we do see that many of the banks are payout agents for remittances, and they themselves, fueled by concepts of financial inclusion, et cetera, are developing wallets and are developing, smaller value accounts or stored value accounts to be able to serve those that traditionally may not be able to have financial services. We see the telco companies are heavily involved in developing wallets as well. And then there's vast investment over the last few years in fintech. We see that to a great deal. A wonderful study that I saw the other day on investments in financial technology in Mexico, Peru, Chile, Colombia, Argentina, and all of those are really bringing new technologies that are going to be able to transform remittances in the region. Again, it'll take some time, but I think the foundation is being laid by those companies. And how exactly do you then roll out some of these products, or when you start developing a strategy of where you want to be in 3 or 5 years? I think sometimes it's a bit of a cliche, or people tend to say it's an obvious thing, but the focus on the customer, actually, if you can go back to the previous slide, it'd be great. The focus on the customer, it's really not about a digital channel or multi-channel. It really is the omni-channel approach. And there is a difference between omni-channel and multi-channel. I mean, multi-channel is have a variety of different ways to communicate and conduct a transaction. But the real key is that omni-channel approach. And what I mean by omni-channel is the underlying concept being that whichever way I decide to interact with the company that's handling the remittance, it should be completely seamless. Whether I decide to do it online, whether I decide to do it on my phone, whether I do a cash transaction, the entire way of interacting should be completely seamless between the customer and the company. And that seems obvious, but for a lot of the companies, especially ones that have sort of legacy platforms or legacy technology, sometimes that's a bit of a challenge. But that is one of the first things that has to be overcome, is to be able to give, and I think the foundation here is choice. Because the reality of the situation is that it's going to be, not all customers are going to have the same needs. And perhaps the same customer doesn't necessarily have the same need on the same day. So the idea would be that, and I'll give an example as we talked about, Javier talked about earlier with Tigo, is the customer today may say, I need to receive the money in cash. And for some reason tomorrow may need to receive the money in the wallet because I don't have an immediate need for cash. So what we want to do is to be able to say, you, the customer, can decide. You can decide right on the spot how you need that money. So for example, we work with Tigo in Central America. It's one of the wallets that we are integrated with there. And the receiver can decide at the time of the remittance. You received a payment from the United States, let's say. Do you want to go pick it up somewhere cash? And if you don't have an immediate need, I can then redirect that transaction so it's deposited into my Tigo Money wallet. And I think that is the approach that needs to be focused for the customer, is to be able to give them the choice and not force them into one or the other. Because again, different customers will have different needs, but even the same customer will have different needs depending on the specific situation that they're in. So then when we start looking at these wallets, mobile wallets, digital wallets, mobile money, what you need here to have success, and Javier touched upon this earlier, is, and especially when you consider it in the concept of remittances, is that wallet has to be part of the local ecosystem for it to have any real utility to the customer. And what do I mean by that is, when you look at remittances, and we know that the average remittance size is of $300 to $350, depending on how you measure it, what is it that the individual receiving the money is using it for? To pay for medicine, pay for food, transportation, utilities, possibly rent. It is the day-to-day necessities that they have. And the reality of the situation is, if the recipient wallet cannot be used to pay for that medicine, food, transportation, then it really doesn't provide a sort of compelling value to the user to say, I am going to put a remittance, or I'm going to put these funds, or I'm going to redirect a transaction to go onto the wallet. Obviously, this is still evolving in many countries, and many countries are doing a fantastic job of expanding that. But if they do not really tie it into that local ecosystem, then the wallet becomes just a resting spot for funds. So when a company like MoneyGram or others are looking into where to make the investment, which wallets do we want to tie into, which mobile or digital wallets will have the most value, it is those that are tied into the local ecosystem. And once the person receives that money, they can then use that money from the wallet. We don't want it to just be, it touches the wallet and then a day later it's going to be removed from the wallet in cash. There isn't really a value to that. We believe that the better value is when that wallet can be used to pay all of these different necessities that the individual traditionally uses their remittances for. So that is how we evaluate sort of the new players on the non-cash channels, is to see, not only the scalability, but also what are the possible uses for that wallet once the money is received. We can go to the next slide. I want to leave enough time for questions, so I'll go quickly through this, but I did want to mention on an important component here, and what we're seeing and we are constantly monitoring, is the regulatory environment. We've all seen the focus in Latin America on concepts of financial inclusion and the underserved, it's certainly expanding, and we think that there's a good opportunity to be part of that conversation, as different governments and regulatory bodies look at how to regulate sort of the fintech space or the digital remittance space or payments overall. We want to make sure that we have a voice in that to help share our experience, because we believe that this is not replacing the traditional model. We think it is something that is going to be, a value add to the traditional model. We're building upon that traditional model as opposed to replacing it. And we're seeing great things now in the region. In Peru, for example, the development of the mobile money platform, BIM, is very encouraging. In March of this year, Mexico just issued their first fintech law, which had a lot of great concept that we've seen elsewhere in the world, especially in the UK. The fintech law that came out in March in Mexico has concepts like a regulatory sandbox, which allows players to sort of test their products and be able to operate without the full weight of the regulatory burden or obligations that is normally applied. I think we also included in there is this concept of open APIs, which we've seen in UK with the open banking. I think that's going to facilitate a lot more collaboration amongst all of the different players, as well. And I think that is something very, very encouraging as we look to invest more and more into the technologies in Latin America. The final point there is the rising importance of what they call RegTech. We get a lot of news on fintech and the investment of fintech in terms of the customer experience, the customer journey, which is certainly, I think, where the focus should be. But we should not undervalue the importance of RegTech. And what we mean by RegTech are technology companies that are aimed at addressing all of the regulatory aspects of remittances and payments and money transfers. As we all know, those are incredibly heavy costs for companies in dealing with compliance and reporting obligations. So now there's a great number of investments in innovation that is not necessarily customer facing, but behind the curtain. RegTech focused on, how better to identify and verify the identity of the users, how to better monitor the activity and comply with all of the different regulatory obligations, and even the reporting aspects and the reporting obligations and the potentials there for making that as seamless as possible. What this does is obviously reduce the costs to the money transfer company, and it could benefit then the consumers by lower costs for them, and just again, a better customer experience. And finally, just to leave some time, on the concept of blockchain and Bitcoin, I agree with Javier that from the consumer side, in terms of using a Bitcoin or a cryptocurrency, I think that's very, very early stages. Every day you put on the news and it's 5 or 10 articles positive about Bitcoin and blockchain and 5 or 10 negative. This week alone, we know that there was the hack of the exchange. There's a U.S. bank that now prohibits the use of their credit cards to purchase cryptocurrencies, but at the same time, then there's 10 articles of how wonderful the underlying technology of blockchain is and how many different use cases there are for different industries. From a remittance standpoint, MoneyGram being one of those companies, we are piloting with Ripple, and where I see the more immediate benefit and opportunities is really on the back end. As Javier was mentioning, when two users are sending money, let's say from the US to Mexico, that is the transaction between the consumers. But behind the scenes, there's a lot of settlement that has to occur between the different entities or companies involved in that remittance, whether it's the money transfer company like MoneyGram, their particular agent, there are the banks that are involved, and that can involve a series of FX conversions on currency, which obviously some volatility there and creates some risks. I think the potential for using the distributed ledger technology and blockchain to facilitate the settlement amongst the companies that are behind the scenes of the remittances is where we're going to see a lot of value, is to be able to perhaps minimize a bit of the currency risk, decrease the time and the cost of those settlements, I think is where we're going to see the more immediate impact. And MoneyGram, obviously, we did put out a press release of having that pilot with Ripple to see if there are opportunities for us to better the service. Because again, as we reduce time of settlement, as we reduce cost of settlement, as we reduce the risk of the FX, all of that translates into a better offering for the customer. So the strategy has to be always focused on the customer, but how do we do things better internally to be able to offer them that better service? And that's where I believe the more immediate impact of distributed ledger technology and blockchains will be. So with that, I'll be quiet. So I know we had some questions that wanted to come in, so I'll cut it short there so that we can go ahead and allow for those questions, Ana Maria.
Thank you so much, Paul. I wasn't kidding when I said we had two incredible speakers and that we were going to get some amazing information this morning. So I'm going to read a question that came in earlier. We are going to have 10 or 15 minutes above the hour to entertain. I think it's important for us to have this discussion. So I'm going to read this first question for both. Which are the main players who are taking cash from users and transferring the value through blockchain, BTC, BCH, etc.? Who is taking care of AML? So,
well, I will say, I don't know, Paul, if you want to jump in. If not, I will just say that definitely Philippines is one of the countries that has most of the experience. I think that one of the points that you are raising with the question is very appropriate, no? The AML. So I think that at this point, there is a little bit of regulatory arbitrage from some of business operating under with Bitcoin, no? Because regulation, except in very few areas, is still a gray area. So, but I will say that in terms of companies, no, in Africa it has been BitPesa. There are many of these companies that are not operating anymore. No, it was BitStake in Nigeria, for example, that it was launched in 2015, then discontinued operations in 2015. Abra, that it was a very popular concept. No, it has quit the remittances space, but the ones that are still very active, I will say Bloom in Philippines, Coins, Revit, all in Philippines, and mainly from the corridor from South Korea to Philippines. No, by far, this is the corridor where more companies are using blockchain as as a settlement mechanism. No? And in the US, no, Circle is probably the company that has been more active, no, particularly in the corridor US UK. So I will say these are some of the names that come to my mind when I think on Bitcoin and remittances.
No, Javier, I think you named all of the obvious ones that I think people should know, and I think that's fantastic. And to answer the second part of that question on the AML component, I think that is for lack of a better word, there's the rub. No, there's the secret sauce. No, a lot of these companies are able to do the remittance or provide the service, but once they start feeling the full weight of the regulatory obligations in terms of the KYC, the AML, the monitoring, the suspicious activity, the aggregating, all of those things that those that are traditional players in financial services, be it banks, money transfer companies, broker dealers that have been dealing with this for decades, that is where they sometimes get hung up, no? And that's why a lot of them, start up and then have to go away, or they end up doing a collaboration with a more established entity that is capable of providing that expertise, no? Because certainly one thing that banks do well or traditional players do well is have that infrastructure for compliance and know how to manage that risk. But I think all the ones that Javier mentioned are the correct ones. I know the folks behind Abra. I used to work with one of them when I worked at PayPal, and very interesting model, and it would be interesting to see where they go, but they did get out of that space. But I think there's still going to be opportunities for others to come in, either by collaboration, as I said, or startup. But I think one of the values that the incumbents have, like Western Union, like MoneyGram, is that ability to handle the compliance aspect of it, because that is a very, very difficult component for those who are not used to dealing with that. Now, of course, they can leverage technology to be able to improve that. And that's an area, as I said earlier, that I think is going to improve greatly in the next 3 years. But being able to put that together, I think, is one of the challenges.
And I think that, as Paul, you were saying, I think it's important to consider that one of the main costs, so the cost of settlement is not the main cost that remittance companies have, no? So the main costs are managing the agents network, doing the AML, keeping the platform, no, doing the customer acquisition, marketing. These are the costs. It's true that due in part to the risking, correspondent banking relationships are much more difficult to have, and the cost of correspondent banking has go up by 400, 500% in the last 2 or 3 years, no? But still, on the overall picture of the cost that the typical remittance company have, the cross-border settlement is it's not the largest part, no? And most money transfer companies, they keep pools of liquidity in their receiving countries, so they are not sending remittances one by one. So I think that the potential for saving is there, but it's also limited in terms of if you take into consideration all the cost drivers of money transfer companies.
Okay, thank you, Javier and Paul. Another question for the beneficiary end. What strategies did you implement to sell the mobile wallet instead of the brick and mortar channels? And have you had experience in enabling the ATM channel as a payout?
Sure, I'll take that one. So if I understood the question, the value of the wallet versus the cash, as I referred to earlier, I think it is the what can you do with that wallet once the money is received, no? So to the extent the first incarnation, no, is normally if you receive it, let's say, to a mobile phone, you can then top up minutes onto your phone. You can do some bill payment for utilities. I think the ability to add those services, more than just receive a remittance, is the only way you're going to move away, from just a traditional cash network. There will always be individuals that need the cash immediately, and there's still going to be, especially in Latin American countries, where it's going to be, many, many years before, it's a non-cash payment for a lot of these items. But that's where, again, as you mentioned with the ATMs, that's an interesting model, no? Because now there's a possibility in certain countries with the technology where the individual doesn't need a card to go to the ATM, right? So they receive it now into a wallet, and then they go to the ATM, and with a code, they place the code into the ATM, and then they'll be able to receive the money. But again, I think to really have a substantial disruption and to be able to have a large number of on the receive side to the wallets, it is the additional value and the additional use cases for the money once the funds are hitting the wallet. I don't know, Javier, si tienes a view on that one as well.
Yeah, I think that you just covered it very well. So I think I agree completely what you have seen. I see that there are other questions. I don't know if you and Maria want that we expand on this, or we should jump into.
We'll take one more. We'll take the latest one. How can we have different payment methods linking Bitcoin or blockchain unless PayPal or other platforms for e-commerce or service digital payments? So
how it works in terms of the practicality, in terms of linking so usually to fund your Bitcoin wallet, no, you have to do those through either credit card or through your bank account. So you know your customer. It's not a big problem because it's the bank that was doing this exercise, because many few Bitcoin exchanges allow paying in cash or money orders. So most of them, you have to fund your wallet through credit card or through bank account.
Yes, and on that, in terms of being able to Bitcoin becoming more ubiquitous and more standard, again, I think there's still a lot of questions out there. A lot of skeptics out there as well. And I think it has to really start from a regulatory standpoint as well. Once we start seeing, the governments and the regulators getting behind, the cryptocurrency, or getting behind the technology, or whatever the case may be, you'll see more adoption of that. I think right now you'll still have fringe players, but you cannot. I would say that, you cannot endanger the integrity of the network that you're using unless people feel secure in what they're using. No, and I think the uncertainty that's still around these will take a while for some of the bigger players to start accepting these in the short term. I think the next 3 to 5 years, as I said, are going to be very telling in terms of how governments react to cryptocurrencies. Again, that Mexico law that I referred to earlier in March does have a component of cryptocurrency in it. We're seeing some of that in the UK as well. So I think as that evolves, we'll see more and more of the acceptance of Bitcoin or other types of cryptocurrency, and certainly in the remittance space as well.
I see also a question from Larissa that is asking about ATM channel as a payout. So here, well, what I can share is that maybe prepaid cards for remittances have been available for some time, no? But I think that without much success, no? This probably goes extra cost, the poor exchange rates that usually are applied, and the logistics of sending the card itself, no? And the lack of customer uptake, no? But it's true that more recently, cardless methods for picking up remittances at ATMs have been developed, no? And in Spain, where I live, for example, we find Hal Cash, no? It's a system based on a dual PIN authorization process, no? So it's a cardless. You can pick up the money on the ATM without having any card, no? It's based on pins, no? A pin that is sent directly by the company, and another that is chosen by the sender, who communicates this to the receiver, no? And similarly, no? In November last year, no? BBVA Bancomer launched Tuyo, that is an app, no, for the corridor US-Mexico, that also allows receivers to pick up their remittance from ATM without the need of a card.
Yeah, and I think that goes back to what I said before, Javier. It's about the choices. No, I'll get my money when I need it. No, and ATMs are an obvious tool to be able to do that. So yes, that is certainly an area that we see increasing, is the cardless ATM transactions as a pickup or a payout agent for some of these remittances.
Okay. Thank you. I just want to say that we will be forwarding the presentations, and there will be a recording of this webinar if you want to continue talking to Javier and Paul. I also want to mention, you have on your screen, if you want to talk more thoroughly and deeply and learn more about what we talked about in this webinar, I invite you to attend M2 Banking and FinTech Latin America in Silicon Valley. This is my third event, the third year that we do this event about Latin America in the core of FinTech innovation. And so you'll all be receiving a discount code for $350 just for attending today. So I had to talk about the event. So please join us there. Again, I want to thank everybody for attending this morning. It's fantastic information. I just want to say, log back to us. We'll be in touch during the day, and see you next time. Thank you again, expert speakers.
Oh, thank you. And I just want to mention, I see there's still some questions. If anyone's interested, you can find me on LinkedIn, and I'll be happy to continue with these conversations. I always enjoy talking to folks because I always learn as well in that process. So again, thank you very much, Javier. Un placer. And thank you very much, everyone.
Hasta la próxima. Que tengan un buen día.
Same thing. Bye-bye. Thank you very much.
Gracias.